Hi, Rob B here with Rob D, and you are listening to the Property Podcast. Back by popular demand is the market update. We used to do them weekly, we're now doing them monthly, but most importantly, we've got a juicy topic to talk about: stamp duty. What's happened? And most important of all, what will it mean for the property market now and in the future? We discuss all of that and more.
Welcome to the Property Podcast, where every Thursday property investors come to be informed and inspired. The Chancellor's given us a bit of a gift. He's given us a lot to talk about in this first of our monthly market updates, so let's get straight into it.
So Rob, there's been a lot of positivity around the stamp duty announcement, but unlike us, we've managed to find a negative story, because really we don't like highlighting negativity. It's not something we want to endorse, but we just had to, because it's just a bit of a crazy headline at least, but actually goes on to be a bit crazy when you read into the story. And the headline is, Labour says a stamp duty holiday is a bung for landlords.
Yep, a £1.3 billion bung for landlords, according to the Shadow Housing Secretary, who is not impressed that the stamp duty holiday up to £500,000, which we talked about on Ask Rob and Rob on Tuesday, applies to all buyers, including investment purchases and second homes. While that is true, Rob, what they've not pointed out is that the 3% surcharge stays in place, and indeed where that 3% surcharge came from in the first place.
Yes, because that surcharge, that tax increase, came from the Conservatives. And actually, for the last 5 years, the taxes have only gone one way against investors and landlords, which is against us. Some of those tax increases probably were needed. Some of them I question, and many others do too. But it just seems bizarre that after so many increases, a temporary tax break is considered a bung. We're nowhere near where we were 5 years ago in terms of tax treatment. So I just feel like it's an opportunity for this particular member of the Labour Party to attack landlords, because that's a fun thing to do and it will always, win votes. But really, it's a load of nonsense and unfortunately a bit irresponsible, because I'm going to sound quite dramatic here, but we are people too, and it's a shame that landlords, investors are constantly attacked. And it's silly messages like this £1.3 billion bung, which causes people outside of the community to have resentment because they think we're all booking private jets on our way to pick our properties, which isn't the case. There's a lot of graft, there's a lot of hard work. The tax treatments are not fantastic for investors and landlords. You have to work really hard to make it work as an investment, which is fine. That's what we do and we accept that. But then when you get a temporary break, which will help kickstart the market for everyone, and it's dressed up as a bung, leaves me feeling a bit annoyed.
In the interest of political balance, though, because this is not a partisan podcast in any way, we've talked about that in the past, the Chancellor did not go out of his way to highlight the fact that this temporary tax break does apply to investors. In fact, his wording kind of suggested it didn't when he announced it, and it took a little bit of time for people to clarify that it does, in fact, apply to investors as well. So I think we can perhaps assume that the Conservatives were anticipating an attack like this and assumed that some people would be upset if they realised that it did apply to investors, so tried to sort of sneak it through and imply that maybe it didn't. So I'd say we're probably not seeing the best of politics on either side here. Although when we last recorded a market update podcast, we did say that actually politicians are doing their best, doing a good job. It's easy to take a pop at politicians and on the whole they've got good intentions and doing the best they can. But hard to resist pointing out things like this occasionally.
So it's good to be back. We've missed the market updates and we're glad that you have too. And the good news is there's plenty for us to discuss on the return of the market update. And then we can't avoid it. Let's get straight into it. The big talking point is stamp duty, and the stamp duty holiday that, as we've heard, applies to everyone. So, Rob, let's give a quick recap of what exactly has happened.
Yeah, we talked about this on Ask Rob and Rob on Tuesday, but if we missed that, what has happened is that temporarily, until the 31st of March next year, for properties in England and Northern Ireland, there is no stamp duty to pay up to values of £500,000. So that means for the vast majority of residential purchases, there's going to be no stamp duty to pay at all. Investors will still have to pay the surcharge, the extra 3% for additional properties, but they will benefit from the cut to the underlying rate. So this will mean a saving for most investors. And the good news is if there are any properties that you've offered on, are in legals on, have even exchanged on, as long as you haven't completed yet, you will benefit from that cut. And in fact, I'm benefiting from that cut to the tune of about £5,000 on the purchase that I've got going through at the moment. So it's definitely a good news story.
Well, besides you being quite happy, Rob, which is good for the rest of this podcast, what does it mean for the market? And we need to look at this in two ways. We look at the short term and the longer term. I don't think we're going to have much of a difference of opinion on the shorter term, although we've not discussed it yet. But let's check. What do you think the impact of the stamp duty holiday will have on the short-term market?
Well, it's going to massively support activity levels, that's for sure. So we're going to talk about general market activity later on because we've got some observations on that. But it is surely going to mean more transactions take place. There's clearly going to be more demand because this is temporary. It's only through till next March. So people will want to get in and make that saving before it disappears. And housing will have just become more affordable for lots of people for whom previously it was a bit more marginal. And it might, but I don't know, lead to more supply as well, because people who are thinking about selling decide that now is the time. The future looks uncertain, but for now, there are lots of new buyers in the market who've had this sudden boost. So it seems like the time to get your property on the market. So we have, of course, seen a huge collapse in transaction volumes this year. I don't know whether this will get transactions back to where they would have been before, but it certainly seems likely to me.
That's really odd, Rob, because I completely disagree. No, I'm not kidding. I absolutely agree with everything you've said. And to be bold, as we often are on the podcast with our thoughts and views, that this could be enough to prevent the property market dipping into negative territory when it comes to property prices this year. A lot of people have talked about how it's a foregone conclusion that property prices were going to go negative. I remember saying that property prices won't do much this year, down a couple of percent or up a couple of percent. And there was a bit of pushback for some people who said, what, you think property prices could be positive at any level? And that's because the government had already done so much to introduce stimulus that the stamp duty holiday, while is a welcome surprise, isn't much of a surprise. When it happened, it didn't fall off my chair. It's like, okay, that makes sense. And that's because it's in line with a lot of other measures the Chancellor's put in place, which is to stabilise the markets. And the property market is a hugely important market for the UK. So in the short term, I think it can really support price points of where they currently are and may even push them up slightly as well.
Yeah, it definitely helps out with that prediction because we said everything will be basically unchanged until furlough comes to an end in the autumn, after which point, if things are going to weaken, that's when it's going to happen because any job losses will kind of crystallise at that point. And that would mean that any impact in property prices we wouldn't see till right at the end of the year. Well, this kind of pushes that back further again into next year because we're going to see a real rush in property transactions, which will support prices through till the end of next March and when the holiday comes to an end. It also, although we'll never know, might support prices because sellers will realise that buyers have suddenly got an extra couple of percent to play with. So they'll put their asking prices or the prices they'll accept up by a couple of percent compared to what they previously would have done. So it might be the case, although we'll never know, that buyers won't actually gain at all. Sellers will gain, but in any case, everyone gains because the market is working. Transactions are happening and people are feeling more confident, and that's what the market thrives on.
But just to be clear, we're not saying this is going to cause a short-term boom. It's more supporting and giving it a nice nudge rather than rocket fuel. There are other things that the Chancellor's done that could be rocket fuel for the property market, and we've talked about that quite extensively on the podcast over the last few months. And although this is more direct support to the property market, interestingly, I think it's more of a supportive measure rather than something that's going to rocket the market. But we'll see. The short term, we don't have long to wait to see what happens. Where we do have to wait a little bit longer, Rob, is the long term. What will stamp duty do for the property prices long term? This is a window with an end date. And if that end date happens, will this be enough to transform the property market and get everything moving again and a start of momentum that carries on? Or will it be a temporary boost and then it softens again?
Well, we could look back to what happened when the 3% surcharge came in 2016, I think it was. So there's an absolute explosion in transactions before the cutoff date and then a bit of a dip afterwards because a lot of demand had been pulled forward. And so I think we're probably going to see the same again. What didn't happen around that date was anything to do with prices, really. If you just looked at average house prices, you wouldn't know that there'd been any kind of event there. So the thing is, as I've already said, we're never going to know what it would have looked like had this support not been there. But depending on what the world looks like by April next year and what's happened with unemployment and what's happened with the virus and things like that, it certainly could get us through this period and keep confidence high, which is a prerequisite for prices to really push on from there. So for me, Rob, it's really hard to say, but it certainly seems to be a factor that weights things to the upside a little bit more than they would have been before.
Yeah, I agree. And I think it's a really interesting point that you've talked about transactions there, because that's where you would expect to see the increase. Property prices may be, but as I've already touched on, kind of giving away my thoughts on the longer term already, is that I see this as more supportive of the market rather than boosting. And it's the other measures, the QE, the investment, the amount of money now that is in our system, that will affect property prices longer term, not the stamp duty. So does that mean as people interested in property, we should curb our enthusiasm for this? No, it's great. It's fantastic that it's done. Stability is a good thing. By bringing this in, the intention is that it will give people confidence, and therefore the market won't grind to a halt and will continue to operate as close to normal as it can do. That's the intention, Rob. But let's now talk about what we've been seeing, because we are quite fortunate. We have eyes and ears like everybody else, and we can witness what's going on in the market, and we pay close attention to it. And then there's also, what we see within our businesses and the Property Hub community. We have more exposure to what's going on in the property market than the average person. So let's share what we've been seeing, and hopefully that'll be useful. So let's start with your own personal observations. What have you been seeing in the market right now?
Well, I was actually really surprised when this stamp duty measure came in. I thought it was something that they might keep in their back pocket for later, but I didn't think it would happen now, because from what I'm seeing, the market's actually performing really well. And I'm completely open to the possibility that the combined might and reach of the Treasury knows more than I do as a single person. But I'm still surprised, because I've got Rightmove alerts set up for all kinds of different areas, as I'm sure you do, Rob. And I see properties selling really quickly. On some occasions, things will come onto the market and sell within a week. And that didn't seem like the sign of a market that needs support. Now, on a personal level, as an investor, I've actually found that a bit disappointing, because there are some properties that I was quite interested in. I went and favourited them and thought, well, I'm not going to do anything with this right now, but if they sit there for a month or two, maybe I could go in and make a low offer, and by that point they'll have been worn down and I'll be able to get this for a good price. Not the case. Everything I was interested in is already sold. So not every area is going to be the same, but it seems to be happening in quite a few places. And I was really surprised by how quickly the market did come back to life. But it's only been, 6 to 8 weeks since the market was actually allowed to open up at all.
I'm seeing very similar things, Rob. I think part of it is the pent-up demand that had been through the fact that no activity was allowed to take place. And then suddenly the brakes were off and, right, if you're going to do something, you can again. And there was that initial surge. And a lot of estate agents and developers I've spoken to have been, quite bullish on their prospects because of that. And when you point it out to them, they kind of don't want to know. It's like, well, no, the market is strong, so that's all that matters. But amongst the people I speak to outside of property, I can see why it is strong, because they do seem more interested than normal. I know people who've bought, sold in the residential market over the last month or two. I know people who are putting offers in. So there is, it seems, an interest more so in property than, say, the start of the year right now, which is really, really interesting considering what's going on, that increased interest. And that increased interest was before the stamp duty announcements. It's going to be interesting to see what that does now. Does that give it a boost even further? Does that give people more confidence? You would expect so. So, as we touched on already in the podcast, the information that we get on that is lagged, but I'm not going to be surprised if we see in a month or two that transactions are up, transactions are strong, and that continues for the next few months.
I've got a theory on this, and this is a theory I've only just come up with right now, so it could well be nonsense. But I think we might have reached a point where people have realised it's time to get on with life. So you've had years of uncertainty for one reason or another. So everything around Brexit's been dragging on for over 3 years now. Then there's lots of political uncertainty towards the end of last year as well. Then you get into this year, things look like they were just starting to resolve, and then we had a pandemic. And now coming, hopefully, out the other side of a pandemic, or at least things being less severe than they once were, with all the emotion and reevaluating your life choices that there are around that, maybe people have just reached the point where they go, if I want to move, I'm going to move. I can't wait for everything to be completely clear. I've potentially wasted a couple of years waiting around. It's time to make that commitment, make that move. So we're seeing not just the housing market opening up and people maybe having a bit more certainty about their personal situations, but also we talk about sentiment a lot. Maybe the sentiment is it's time to get on with things now.
It makes a lot of sense to me. I think it's a really interesting theory, and it's not something I've really thought of before, but you can understand why people would feel that way. Let's give it a title just in case it takes off. Uncertainty fatigue. Yeah. So people are tired of feeling uncertain.
Brilliant. So we've claimed that for if it turns out to be a thing, and if not, this is just 5 minutes of a podcast and it'll get forgotten about. Perfect. Can't lose.
Yeah, well, and if it's really bad, then we can go back and edit it out. I'm sure we can figure a way to do that.
So, of course, we operate a business within property and everything that happens affects business as well. And the effect of this surprising market resilience and lots of activity, Rob, has made it really hard for us to do deals.
It has, and that's because of the uncertainty. Now, you would think, and I did think, that it's going to be deals galore. And we have been able to put some great deals together for Property Hub Invest clients. And the quality of the deals have been fantastic. But what has not been fantastic is the volume or frequency of those deals. It's just been so hard to operate. And what I've found is that developers, on the whole, with obviously some exceptions, have decided to just take a view. Let's wait a month or two to see what's happened. And you know what? Based on what's happened, looks like they made the right decision. I actually think now the stamp duty changes and having a level of certainty actually will help deals to happen again. I know it sounds a bit crazy, but I'll explain why. The reason why is before, developers didn't know where to price. Do I need to take a discount off my asking price? Should I accept that pushy offer that we've put in? Or should I wait to find out where the market is actually going to settle before doing deals? What's going to happen is now that the majority of people will probably accept that house prices are pretty much what they were before we went into lockdown for the time being, then it's easier to put deals together, because there's more certainty. So we can all anchor to a price of value. And if we want to get a better price than that by offering incentives like taking a lot of the stock and being able to sell it very quickly, then a deal can possibly be done. So although this is positive for the market and you would expect a stronger market would be more difficult to do deals, I think actually what it does bring, which is more important, is certainty. So for those who got into the deals from Property Hub Invest over the last few months, congratulations. They were massively oversubscribed. We had more investors than we had stock. But what it should now allow us to do is bring more through in the coming months. It's not an overnight thing, where it means more of our investors can take advantage of the deals. And of course, you can always do deals every day and every week. For those who are thinking, why can't you do more? It's just that we're very, very fussy.
Now, one aspect of the market that we haven't talked about yet in this update is the rental market. And there's been data around suggesting that the rental market has rebounded quite strongly. And that's been backed up by what we've seen. It's still more difficult physically to let property, because if you've got a property that's tenanted, people are naturally not going to be super keen on prospective tenants coming and traipsing through their home. And even for empty properties, there are still a lot more measures you can take. But despite that, a lot of markets, again, seem to be surprisingly active. I had a property where the tenants gave notice the other week, and I was concerned about what uptake was going to be like, especially because it's in an area that traditionally does well with students, and there is a lot of talk about fewer students being around this year. But it had 4 strong offers in the first 48 hours, which I was actually shocked by. But then I've also seen, just from observation, that the London market still seems to be quite slow. It still seems very much to be a renter's market in London. And that, I suppose, ties in with some of the things that we've seen about people moving out of London or potentially looking for more space. So from what I've seen, and it is just personal observations, it seems like the rental market is holding up well, but it's going to be very localised.
It really is very localised. And my own experiences with my own portfolio have echoed that as well, Rob. But also we can look at this at a much bigger scale, which is Property Hub Lets, which is our letting agency. And we can look at all different areas, because we cover multiple areas, and see how the market's behaving. And we've got some areas that are performing particularly strong, like Crewe. But there are some areas, like city centres, that aren't doing as well. They're okay, they're moving, it's ticking along, but during this time of year, particularly in city centres, you'd expect to see a mini boom, a bit of a surge, because students coming in. So big cities where they have an influx of international students tend to do quite well. So it's quite interesting to see that difference, and I think this point that you've touched on there about localisation and how different it can be is a really interesting takeaway that property investors should think about and use moving forward.
Yeah, I think everyone, including us, is probably a bit guilty of looking at the national picture too much and looking at averages and looking at what house prices or whatever are doing at a national level. Because while that is important, of course, there are always huge local variations, and it's what's going on locally to the area that you invest in that actually matters for you as an investor. The thing is, of course, the reason why we gravitate to the national stuff is that's what it's easier to get the stats for. It's very hard to get any actual quality data that tells you what's going on in your own particular micro market. But that's why it's important to be connected locally and talk to people and build up a picture from as many data points as you can of what is happening in your local area. And that's why having your network in property is so important. And while we can't tell you what's happening in your area, we can at least pass on what we're seeing from a reasonable amount of scale in our business and give you that one extra data point to work with in these market updates.
So it's now time for us to focus on a success story. And thank you to everyone who continues to contribute to this, whether you're connecting with us via our social channels, emailing in, or leaving an iTunes review. We love it. And this particular success story is from an iTunes review that has come in earlier this month. And it's from Don. And Don says, Rob and Rob have given me so much info and confidence with their podcasts over the last year or so. I'm an accidental landlord that's decided to make it a serious business now, and this podcast has helped me achieve that. I'm just about to buy my first property in a limited company, and I'm excited about getting a few more before the year is up. Most of the property advice online tries to sell you a dream, a free webinar, and then paying for more info. This guys offer loads of free content with some great stuff all round. Well, thank you, Don. Thank you for your 5-star review. Thank you, most importantly, for sharing your progress and what you've achieved. Congratulations on becoming serious about property investment. And I love it that the fact that you're going at it big guns, the fact that you're going to go for a few this year is fantastic.
So we've just got time for Hub Extra, that part of the show where we give you a little extra resource to take away. And there's plenty more of that in the Hub Extra email that hits the inboxes of Property Hub members every Friday morning. This week's resource is homegrown. It's one that we put together about stamp duty to help you work out how much you might be saving. So we talked back at the beginning of this episode about the stamp duty changes and how investors would benefit, but how much will you benefit? Well, we've put together a really simple spreadsheet where you can put in the price of the property that you're buying or thinking about buying, see what you would have paid in stamp duty, and see what you will be paying in stamp duty up till the 31st of March next year. We've included that in a really helpful article that the team has written about summarising exactly what's happened and what it means. So go to the show notes for this episode and you'll find a link in there.
So that's us done. The return of the market update. I hope you've enjoyed it. We'll have the next market update in August and we will run that through the rest of the year every single month. But don't worry, the podcast, of course, in its normal form, will be back on Thursday. And before then, we've got Ask Rob and Rob. So plenty to keep you busy. But if that's not enough, you can check out our YouTube channel, search for Property Hub UK, and check out loads of extra content there. And of course, you can connect with us on our social channels, searching for the same handle, at Property Hub UK. So, now you've got lots to be going on with. We'll leave it with you. Take care, everyone. Have fun. Bye-bye.
Bye-bye.